Hello. Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, May 24th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend led by large cap, more specifically large cap tech. Continue to see some issues as we gave back some of the gains today in regional banks, but we're not overly concerned about that. We're not fishing in that pond. Commercial real estate, the news continues to be bad on that front. Just noting that those are to be avoided. Check over here in the trend gauge. Leaders marked bullish. Weakened a little bit yesterday. Leaders actually held up better than the overall indexes today. Short term, we're still in an uptrend. Yellow arrow. I didn't change anything here because of something I'll talk about momentarily. Medium term 50-day moving average neutral, long term 200-day moving average neutral. So what happened today? Not a good day in the markets. We gapped down 0.4% at the open, and again, this is tied to the I'm just going to keep the negativity on the comments to myself, but Washington battling over uh, the debt ceiling as the ideologues go to their respective corners. One of the most common sense plans I ever saw was something presented years ago, and it was called the penny plan. And it's if you just take a penny out of every dollar that you're budgeted. If you don't have a manager that can't find 1% efficiency in a loss to, and we are talking only about discretionary spending, not earmarks. If you've got a manager of a department that can't squeeze 1% out of the budget, then that person shouldn't be managing. But I know what I'm saying makes common sense, so it'll never happen. So what happened today? Gap down, fell till we found support right above the 4100 key level in the S&P. We tried to rally late afternoon, but sold off hard the last 30 minutes. But after hours, NVDA is up over 20% with the biggest revenue projection increase that I've ever seen um, out of an earnings report. It's not just that they blew away their current forecast, but they raised their uh, next quarterly revenue by almost 50%. That's just, and it was already like $7 billion. That's uh, AI chips, the AI revolution. Is it a bubble? We may look back on it being a bubble someday, but if it's a bubble, it's in its infancy. This is just something that people have seriously been talking about starting in 2023 when ChatGPT came out. And it's trickled now to all of the major tech players and a lot of the minor tech players making big inroads in it. And it's got the potential to be revolutionary the way the internet was revolutionary back in 1999. And I'm not being hyperbolic when I say that. When you hear some people that are really in the know and how this can work and the productivity that it can bring to companies is pretty mind-boggling. And yes, some people will be changing jobs because of it. That's called creative destruction, as new jobs will be created out of it. But people will be able to do more productive tasks than some of these mundane research things they can just let AI do. But this is not only affecting NVIDIA after hours, but there are at least a half a dozen other companies that are up significantly after hours based on what they're reporting. I'm talking about Microsoft, Google, AMD, AI, SMCI, all up significantly. The NASDAQ 100 is up uh, about 1.3% after hours as uh, a lot of those companies are big components of the NASDAQ 100. And when the NASDAQ 100 goes up, it lifts these companies up with it, NVIDIA being the driver, obviously, but it's kind of like a contagion that in this case is a positive contagion. So these numbers we'll go through what the daily numbers finished, but like after hours, GROTECTION closed the day down 0.5%. It's up 0.6% after hours, um, because of the stocks that we own that are getting some nice pops after hours. So here we are, the RG7. This is our 7 growth composite down 0.86%, S&P 500 down 0.7%, NASDAQ 100 down 0.5%, Dow down 0.8, mid caps down 1%, Russell 2000 down 1.2, Global 60/40 stock and bond down 0.63%. Both stocks and bonds on a global basis lower today. In-house GROTECTION down 0.50% at the close. It's weekly chart Wednesday, so we'll take a look at the portfolio on a weekly basis, as well as some other stocks that are reporting earnings that we want to take a look at. But first, let's just dive into things, and we'll start here with the S&P 500. So you can see very clearly the gap down. That gap is almost being filled after hours. Clear break below the 21, but on the good hand, we did stop at the bottom of this line that I drew last night, the bottom of this consolidation that we broke out of. So the breakout has failed. We went back into the 8-day base today before the breakout, and now after hours, we're at around 4140 after hours. So back near the top of the pre-breakout um, base. So we'll see if that follows through tomorrow. I mean, I'm sitting here watching NVDA just continuing to tick higher. It initially popped to 330. It's up to 390 now. I don't really remember the last time I saw a massive move like this after hours. So it's good to already be in the stock. So there's your daily on the S&P 500, NASDAQ 100. We knew it was time for a pullback. It didn't even get back to the top of its base, and closed the day at the top of the range. And after hours, it's up 1.5% to 337, which puts it right near the highs before this prior 2-day pullback. Tech is alive and well after hours. The Dow broke the 50-day moving average yesterday, sitting on the 200-day moving average today. uh, Pretty good support spot for that. Mid caps, banks were weak today. Oils were strong, but you can see looks a lot like the S&P from a gap down and an unfilled gap perspective. But again, closed at the bottom of this recent range, and not breaking the range is a mild positive. IWM, small caps, sitting on the close the day sitting on the 21 and the 50-day moving average. Hey, if they can hold that, that's a plus. The next move up would be not we're not up big after hours here, as small caps not really being impacted by NVIDIA and the tech rally after hours, the big tech rally after hours. But if we can put in a bottom here, that's just a normal 2-day pullback off of a reversal at the 200-day moving average. So it'd be nice if we could hold this low. Let's go now to let's go with the dollar, since this has been playing a big role with precious metals. UUP dollar continuing its run up another 0.35% after hours, coming into the 200-day moving average. How did that impact the precious metals? As you might have expected, staying intact, this negative correlation. Gold down 0.8% today. Gold stocks down 2.3%. Silver SLV down 1.6%, making new lows. How about the VIX? With the fear of the debt ceiling shenanigans, a big spike up for the VIX, comparable to the big spike up that we saw back on 5/4 here, closing at the 20 level, above the 21, above the 50-day moving average. This might just be as high as the spike gets based on the reaction to the indexes after hours. Let's flip to bonds now. TLT, long-term bond, giving back the gains that it got yesterday, down 0.5%. The broad bond index down 0.28%. New closing lows on that. You know what that means for yields ticking back up. There's the 10-year up 0.6% today, and the 30-year TYX up 0.35%. Be interesting to see if we can get above this 40 level, which it's been a big resistance area going all the way back to last December. Let's go finally to Bitcoin. How's that doing? Was up yesterday, gave it all back today. New closing lows on this, closing lows going back to the beginning of March on Bitcoin, down 3.6% on the day. Let's look at the equal weighted indexes quickly. RSP down 1.1%. New closing lows going back to March. You can see the relative strength on this, again, highlighting that this is a big cap uh, big big cap tech. The top of the indexes has been what's dominating. You can see this also in QQEW, the equal weighted NASDAQ. Actually, not quite as much. In fact, the equal weighted NASDAQ has been outperforming the cap weighted. That's pretty interesting. The cap weighted NASDAQ 100, as this is sitting right on the 21-day moving average. Let's flip now to the tail of the tape. You saw the VIX spike at 20. Bear case, break below the 21, day one of that today. At 2 o'clock, the FOMC minutes came out and showed some disagreement on what might be the next move. Right now, the markets are pricing in about a third of a chance of a raise at the June meeting. That means 2/3 of a chance that there's not going to be a raise. But one Fed speaker was quoted today as saying he thinks he would recommend probably pausing in June and then reevaluating in July. Day count went from 3-day consolidation to the second day down, second close below the 8 EMA, first close below the 21 EMA. But again, if the after hours gains hold, this will be changing tomorrow. The bulls can only hope. So expectations by the close to neutral with the move below the 21. Again, that can change tomorrow. The S&P, we just put in a big triple bottom base. This is interesting. I hadn't really seen this pattern in a while on an intraday basis, but you can see just this almost looks like an inverse head and shoulders. 1 cup, 2 cups, 3 cups try to break out, but then failed into the close. But again, we're up here around 41.40, which was the lows of yesterday, trying to get back above that breakout range. So where were we? Okay, sectors. What was up today? Just the dollar. Cybersecurity, as Palo Alto reported a nice earnings report. Oil's also up today on the downside. Regional banks, big banks too. KBE down also. Real estate down. Semiconductors down. But semiconductors are flying after hours. The SOX went from 431. It's trading at 446 after hours on the back of NVDA, and gold, silver, and gold and silver stocks were weak. Here's the portfolio. We trimmed some Celsius early in the day, had a nice comeback, and we hedged with SPXS when we broke below the 21-day moving average, a partial hedge. Uh, Bottom line is our beta at 1.20, coming into the day at 1.38. Bottom line for the day, S&P 500 breakout fails, but after hours NVIDIA earnings report is igniting a tech rally. And we'll see if we can follow through on that tomorrow. So weekly chart Wednesday, let's flip to the weekly view. And you can see here something I want to point out. Let me blow this up a little bit and get rid of the stochastic so that it's clearer. The 10-week moving average, or the 10-period moving average, or the 10-week on a weekly chart, obviously, is roughly the equivalent to the 50-day moving average on a daily. You can see here the S&P 500 came within, it closed the day at 0.6% above the 50-day moving average, which is at 40.90. Now, if you go to the weekly chart, this is an anomaly that pops up every once in a while. The 10-week moving average is a full 29 points higher. It's at 41.19, and we actually closed slightly below it. But the reason for that is actually a bullish reason. If you look back at the last 10 bars here, and look where they closed relative to the week. And we're going to start 10 weeks ago on 331. Is that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? No, we're going to start actually here on the 324 bar. We closed like mid bar. Then at the top of the range the next day in the upper 2/3 the following week. I said the next day, I meant the next week. Near the top of the range, 414, bottom of the range, but it was a tight range on 421, top of the range on 428, upper third of the range on 55, mid range, but very tight the week of 512, and top of the range yesterday. All you do to get the 10-week moving average is add up the last 10 closes, and if they're at the high end of the range, it's going to pull the 10-week range up higher. And that's why you have to pay attention on the weekly charts when you're touching the 10-week support, because if you look at the 50-day on the daily, you think, well, we've got room there, we can pull back much further. Well, maybe the pullback is complete if you already touched the 10-week. Remember, O'Neill was a big proponent of using weekly charts for sell rules. And that's why we instituted Weekly Chart Wednesday and been paying a lot more attention to weekly charts lately. So here you see the S&P 500 just barely below the 10-week moving average, and now 20 points above it, or 0.5% above it after hours today. So let's go to the charts that we wanted to take a look at today. We'll start with what we own in-house. Weekly chart of CMG. You can see a normal pullback here after a big move up. Certainly no sell signal there. Uber had been a nice leader, big move up on earnings. Again, having a negative week, but still no sell signal there, just really pulling back to the top of the base that it broke out of on earnings. NVDA, this is going to just blow this away. We're like all the way up here at 3. You can see where we are up 26% after hours now, trading at 385. All-time highs. All-time highs, what does that mean? It means that every single person who owns NVIDIA right now has made money. They're not underwater. They're positive. That's pretty impressive, and that's why moves to all-time highs really need to be noted when they happen. So back to the weekly chart of NVIDIA, that's just going to have a huge bar that's going to end up all the way up here and really reset the spacing on this weekly chart. DT, really like the way this is acting. Tight range after its move up, break out of the cup base after earnings. It's one that we're looking to add to. Celsius, CELH, sold 1% of this today. Just because of the stress of the overall market, it rallied nicely after we sold it. So some buyers came in despite a weak day in the market, which is what you want to see. So we're happy with that holding. AMD is up nicely after hours. Geez, look at that. I'll take that. Up 8.5% after hours. That's going to put that range all the way up here. So very nice move for AMD after hours also, which we have a 2% size in. Microsoft after hours also up almost 2%. No sell signal there in any way, shape, or form. Tesla, we were down in this position initially. I saw it. It's up 2% after hours. Also, not quite where we bought it, but a nice move. Also, trying to get above this 40-week or 200-day moving average on Tesla. And finally, Meta. Meta up 1% after hours. Google's also up after hours. Let's take a look at that as I hit the big AI stocks. Up 2% is Google after hours. Here's AI. C3 AI up 8.7% after hours, pretty impressive. SMCI uses NVIDIA chips in data centers, up 9% after hours. So this is trickling over to quite a few of the other companies that have been identified as being AI centric. More earnings after hours. ELF uh, really having a nice, nice. We sold this because we didn't have a cushion after hours. Rules are rules. Up 12% after hours. So ELF, the bulls might be coming back to that. That'd be a nice break of that downtrend line on the weekly chart. Another one up after hours is Nutanix. This is a computer enterprise software, up 16% after hours as it tries to put in a bottoming base. Here, let's look at the charts of the semiconductor index. Here's the SOX. That's up 3.27%, and that's going to be, the pivot is right at 445, so it's right below the pivot. On that, SMH, the other big semiconductor index, up 5% after hours. This has a heavier weight in NVDA, and that's going to be a breakout as the pivot on that is 132. So that'd be a breakout from that flat base also. So some good stuff happening after hours on NVIDIA's earnings. If you're a bull and you're in those, as our clients are, let's hope this follows through to tomorrow and the gains stick. So that's going to wrap it. And one reminder, of course, what we do at Revere, protecting the downside. We've sold a couple of things over the last couple of days, reduced our exposure from like 1.5 to 1.2. So we took off about 20% of our risk, and we'll be putting that back on. If the markets, if it looks like today, put in a bottom at it's a good low risk area, this 4,100 area. As long as that holds, we get back above the 21, we'll be putting some more risk on. We did add another percent of NVIDIA after hours around 352. So we've got a nice gain on that also. And these numbers are why we do what we do here at Revere. It's we're trying to keep our clients away from bear markets, especially as you approach retirement. It's devastating to your pocketbook and also to your psyche. So this is what we avoid. And then when the markets right themselves, the returns will take care of themselves. And if you're interested in this approach, reach out to me, Don at revereasset.com, or my partner, Dan Stewart, Dan at revereasset.com, or you can call 855 Real Wealth. That's 855-732-5932. So wrapping up NVIDIA earnings celebration day, Wednesday, May 24th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.